Well, the direct impact on Hong Kong is minimal in the sense that export directly from Hong Kong manufacturer, very small in number. But we are re-exporting for the mainland, and in that sense, we will be affected. But we have seen realignment in the supply chain, in the industry chain. A lot of mainland companies trying to realign their supply chain and manufacturing bases across Southeast Asia, for example. So in the process, there are challenges and opportunities. On the one hand, it is a geopolitical headwind, the impact on trade, even indirect trade. But the opportunities for us is that we should position ourselves as the high value added supply chain management center, helping these mainland companies going global, because many of them may not be very familiar with the regulatory requirement, the ESG requirements in other jurisdictions. And in that sense, we can help. We can also facilitate the trade finance and related funding requirements that they need to expand their global business.
Hong Kong is an export and re-export oriented economy. 6.5% of Hong Kong's exports went to the United States last year. Other major markets saw a decline in exports: India, Japan, Korea, UAE. What is the outlook for Hong Kong exports to the United States?
To the United States, still subject to pressure, but we have expanding ourselves in terms of market. So you will see the export to Southeast Asia, for example, has been on the increase. Likewise, import. So we have to open new markets and new frontiers. That also applies to the financial market.
The new tariffs from Trump will go into effect on March the 4th. This is next Tuesday. It also coincides with the days that the two sessions will open, the CPPCC, the annual parliamentary meeting that sets the agenda for China. We are going to be closely watching this for policy clues coming out from China. What's your take on the need for more stimulus from China?
Well, for the mainland, the economy is growing steadily. And over the past 2 years, they rolled out different measures, even stronger fiscal measures, as well as more accommodating monetary policies. It's working. And for mainland, such a huge economy, the development strategy they have been adopting is, on the one hand, continue to make good use of their strength in the manufacturing sector, and at the same time, realign the manufacturing base across different jurisdictions. That is one. But on the other hand, the internal domestic consumption is important. So in their words, it is the external circulation and the domestic circulation reinforce each other to provide the impetus for the economic development.
You've forecast Hong Kong's economic growth for the coming year, 2 to 3%. The challenges in the external environment still exist. Are there more headwinds than tailwinds? Well,
we are working very hard to expand new markets and to develop our financial center status, as well as under the IFC diversify the product offerings, like the commodities, gold, as well as opening up new markets like the Middle East in terms of new capital sources. So remain very confident about our financial market development. And in general, that will stimulate consumption. As you can see, during the stock market rally, the sentiment, the business sentiment, the consumption spendings are all turned more positive.
Local asset prices have been contained under a relatively high interest rate environment. That's due to our linked exchange rate. We are tied to the Fed. What is your outlook for interest rates this year?
The interest rate higher for longer will remain there, given President Trump's policy may cause inflationary pressure. So we don't expect the interest rate to come down anytime soon. But at the same time, I think we have adjusted to that environment. And for the asset market, we have talked about the stock market. The property market, in terms of residential property, in recent 2 months, stabilized at that level. In terms of commercial property, it is a little challenging. That is why in our land sale plan, we stopped selling commercial sites. And we are going to relax the usage of commercial buildings for different purposes to make good use of this stock and let the market digest the current supply situation.
Hong Kong's property prices fell 7% last year. In a higher for longer, will property prices remain under pressure?
I think it will be under check, but we do think it will stabilize at this level, and any movement will be a very narrow range. We have looked at the supply in the coming 2-3 years in terms of completed units, still relatively high level. But on the other hand, the demand side is also strong. Number one, Hong Kong people want to own their home. Number two, in terms of, say, for example, our various talent schemes, we have approved over 280,000 applications. About 180,000 such talents have come to Hong Kong. So you can see the diverse development in the rental market as well as the purchase market. Purchase market, property market softened, but rental market went up quite nicely. So when these people settle down, I think some of these people will turn to the buying market, and that will give additional support to our property sector.